Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure level for this market. In fact, this zone was acting as previous resistance here, turned support here, again here, and here with the market testing the area and starting to reject it to the upside. In a situation like this, we could expect more bullish price action to be printed away from this zone. So on the monthly, everything is looking quite bullish and we could expect more bullish continuation. Dropping down on the weekly time frame, what do we have? Well, here on the weekly, we can notice how precisely the market was respecting this area. In fact, if we look closer, we can see how this zone was acting as a very clear area of resistance here, then acting as support here, again support here. Then we had this fake move here with the market breaking below the zone but not managing to respect it as resistance here. The market broke back above, and at that point this level once again started acting as support with the market testing it and starting to reject it to the upside. So as we're rejecting support, we could expect more bullish continuation. However, if we zoom in to the most recent price action here on the weekly, we can also notice how we now have the creation of a W formation. And in general, after the creation of a W, what you would expect in this specific situation is first the correction after the W for the completion of the pattern, and then more bullish continuation. So we could expect a bit of short-term bearish price action before then getting more long-term bullish continuation away from that monthly and weekly support areas that we have just identified. Going down on the daily time frame, what do we see? Well, here on the daily, I did speak about USDJPY quite a few times in the past weeks. I spoke about it when we were here. I explained all the reasons for which we could expect first this correction and then from here the rejection to the upside. Then when we were here, I explained all the reasons for which we could expect this correction and then more bullish continuation. And while the market was melting, I explained all the reasons for which from here we expected a rejection higher. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, what we can notice at the moment is that we have a market which is currently creating a very strong impulse to the upside. Now, in a situation like this where you have an impulse and the start of a correction, you have to take your Fibonacci from the low to the high of the impulse in order to measure the correction. And what we can see here is that we have quite important structure all across this zone. In fact, if we look closely, we have the 0.32 50% and 0.618 Fibonacci retracements, which are lining up perfectly with this area of previous resistance that was then turned support here, again here, then started acting as resistance here, preceding this rejection to the downside, and currently they're acting as support, essentially creating a confluence of support at this area because we have both the Fibonacci levels here and also the structure. So what we could expect in a situation like this is for this market to potentially go and test this confluence of support before then getting rejected to the upside. Now, If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the JPY, we can see how with the last reports we have seen a huge decrease of the net positioning. We went from having the high of minus 20k net positions all the way down to now having minus 68k net positions. So essentially they got decreased by more than 3 times. showing how institutions have been moving quite aggressively to the bearish side of the JPY. Now, you have to keep in mind that every currency on the spot is traded against the USD. So if you're checking the data for the JPY, you're actually checking JPY USD, meaning that if JPY USD is getting weaker, USD JPY is getting stronger. So institutions adding shorts on the JPY means that they're adding longs on USD JPY and making USD JPY stronger, which is the reason for which it has been trending higher. So if we will have a correction to that confluence of support that we were previously identifying, how we could be approaching a potential reversal higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge discount on the upfront price of the lifetime mentorship program from $497 all the way down to only $97 plus. As an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program from your student dashboard, there is a button for that. You can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, from this button, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, or at least go and check it out at transparentfxtrading.com. You also find the link in the description of this video, just here below. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.